Hi guys, and welcome back to Crypto Scoop FM. A lot of interesting things have been happening in the market, but today I want to focus on three things. I want to talk about AI. I want to talk about privacy and privacy coins and the whole quantum era approaching us. And finally, I want to talk about the European Central Bank. And apparently, a statement has been issued by Christine Lagarde, the head of the European Union, ECB, and she is kind of pointing to this idea that Bitcoin should not and probably never ever be part of any of the European Central Bank reserve currencies. And I'll quote her. She says, and quote, reserves have to be liquid, reserves have to be secure, they have to be safe, and they should not be plagued by money laundering or other criminal activities, quote unquote. I'm going to talk a little more about the money laundering aspect of this conversation because I think what she is doing here is completely misguiding the true nature of blockchains. Blockchains are by design transparent digital ledgers, and every transaction that is happening on the blockchain is visible for all to see. And with some sophisticated financial engineering, I think it's quite easy to figure out who are the people behind these transactions. So we'll talk a little more about that. I'll take you through some statistics with reference to criminal activity, especially in European Union, and how money laundering, how much in value money laundering happens in the EU. So we're going to talk about that as well. So let's start there. But let's first start with AI, guys, because I think that's an important development that has happened today. And I'll talk about the relevance of AI in the context of cryptocurrencies, right? So this is a post from the Kubisi letter where he says that the U.S. economy is now built on AI. U.S. private non-residential fixed real investment in data centers has soared 300% over the last 3 years, guys. 3x increase in capex to build new data centers, guys, and all of this data center capacity, all of this energy capacity is going into just one thing, which is to lead the world in AI, and especially the challenge that is emerging from China. I think America now is in this space where they're concerned about China's global rise, and they know the final frontier is artificial intelligence. So all of this money is now going to AI. I'll go on. And Kobesi says that during the same period, inflation-adjusted non-residential investments in structures excluding data centers has barely seen any growth. So whether it is new office spaces, shopping centers, hotels, warehouses, factories, manufacturing capabilities, or any other commercial building. So all of the money, all of the capex is going into just building data centers. You can already see how important as an investment AI is, because guys, the future of AI, the future of automation is closer than we think. And when we cross that chasm, almost everything in the world that we use, touch, feel, and engage with is going to be powered by, in some sense, intelligence. Whether it's on ground intelligence, its physical manifestation will be in the form of humanoids. We've already seen a lot of companies in this space, but Tesla is way ahead in the competitive landscape. The final one really caught me, right? Meanwhile, AI related spending has contributed to 62% or 1% of the 1.6% US GDP growth in the first 6 months of 2025. You can already see, guys, like 70% of US GDP, 70% is expanding simply because they are investing so much money in data centers. If this money, if this pipeline dries up for whatever reason, we would see America either going into a stagflation or a complete recession. So now how important AI is. So if you look at the Nvidia chart, guys, you can see that the first breakout in the chart happened somewhere around May of 2021. But this is when the market was gripped with COVID, right? So the rally could not continue. But the next breakout happened in June of 2023. And since then, we've seen Nvidia give us a phenomenal return. I mean, if I put that number for you, at all-time high, this was a 5x return on a very large company in a very short span of time. Now we have seen a pullback, right? We've seen there is a correction that is happening in the market right now. But now that we know all of the money and the velocity of capital that is being pumped into the AI bubble, into the AI economies, rather, a majority of it is going into funding capex, and because that cycle is going on, the demand for compute is just going to be through the roof, and so I think this correction is short lived. I think maybe it comes down all the way to this resistance at 137 at some point in time, and after that we will see the market reversing. And there are a couple of reasons why I think that's going to happen. One is because in October, Federal Reserve Chairman, he said categorically that December is going to be the beginning of or the end of quantitative tightening. In simple words, what he's saying is we're going to start reducing the interest rates and we're going to start generating or printing more money. Now, that liquidity is going to get sucked into, most of it is going to get sucked into more AI investments, but a lot of it will also start percolating into, other, into what I call the debasement trade. And I'll give you some reasons for this, right? So here's another interesting story from the BC letter. They say that global central banks gold purchases, they have jumped 10% year on year in Q3 of 2025 to 220 tons. Now you can already imagine, right? And this is a 10% increase year on year, right? So comparing it to 2024 Q3 2024 versus Q3 2025, we have already seen a massive increase, right? The next thing is this also marks a 28% quarterly increase, putting it 6% above the 5-year quarterly average, right? So sequentially, this number is up almost by 28%. That's a huge volume of buy. So far in 2025, central banks have added 634 tons of gold to their reserves. And you can see already since 2022, these numbers have been north of 1,000 tons every year. And I will not be surprised to see a phenomenal demand continuing to happen in gold. Now, part of this is happening because the world realizes that it's going to be impossible for America and for much of the Western world to get out of this their spiraling debt situation, and so there is no reason to hold US dollar or US treasuries in your balance sheet. So central banks globally are trying to protect the downside of an imminent collapse, right, or a correction by loading up hard assets. And that tells me, for all of the conversation around, is BTC good and bad, or is the rally over, and yada yada yada, it's pretty phenomenal to see the performance of this asset, right? It's pretty much ridden like 6-7x since January of 2023. And so while there is a correction right now, if you look at the big picture and if you can connect the dots, it's very clear that while central banks may or may not adopt Bitcoin as a digitally scarce asset, others, especially in the private market, will. And I want to give you this little news that I saw earlier today. This was announced yesterday, and this is where JP Morgan is moving Bitcoin into the $318 trillion bond market. So guys, for all of this conversation, I mean, I'm pretty sure you've seen Jamie Dimon go on to news channels and say Bitcoin is, it's a rat poison. Actually, Warren Buffett said that. But he has professed similar feelings for Bitcoin. And here is his organization, which is launching their own Bitcoin structured note. Now, I won't go into the details of this note, but basically, this is the product which allows institutions, right? This gives conservative institutions Bitcoin exposure without buying the Bitcoin itself. They don't need to worry about custody. They don't need to worry about crypto exchanges, because basically what they're doing is they've tied up with BlackRock, and BlackRock's spot ETF, I bet, is going to be the asset that they will buy and use that to create this debt product, right? So they offer some kind of an upside and downside protection on this. I'll link the whole post in my video below. You can go through it. But what this tells you is that for the longest time, these institutions were telling the world that Bitcoin is bad, that cryptocurrencies are evil. And here they are creating their own products and bringing them to the TradFi market. So that tells you that what they say is very different from what they actually do. So you should be aware of this, guys. So already we have two catalysts, right? We have the debasement trade, and speaking of the debasement trade, I want to show you something else which I found very interesting. Yes, here's another one. Right, crypto is increasingly becoming a practical alternative in countries still struggling with high inflation, guys. So you have countries like these 6 countries have seen maximal crypto adoption. There's Bolivia, right here in South America. There's Venezuela, there's Argentina, right? There's Turkey, Iran, and Nigeria. What does all of these countries have in common, guys? The most common theme amongst these 6 countries is the fact that all of them are hyperinflationary economies. For years and years, the politicians, for their motives, have completely debased their currencies. And so people there are the first ones to escape the financial collapse of those societies by parking their income, their net worth in crypto assets, right? So this is another big driver, guys, and this isn't going away. You already see major central banks buying gold, right? But not everybody has access to gold, right? Okay, one last thing before I wrap up and I move on to the next section of my conversation is that silver has surged to a new record high. It just broke its all-time high, and if we look at the price, it's now somewhere around 55 O's, right? So basically goes on to say that while everyone is focused on AI, deficit spending is soaring, and the Fed is cutting rates into 3% inflation. Own assets or be left behind, right? It's important that you really understand and grasp the impact of something like this. If large institutions are bidding, hard assets, it only means that they foresee a situation where a lot of liquidity is going to flush into the market, inflation is going to increase. In any increase in inflation without sizable increase in productivity eats out away into your net worth, and that's exactly what I see playing out, guys. So coming back, Bitcoin might not look awesome today. In fact, I mean, if you look at it, it's still trading above 90K, right? And it's still above this crucial 73, 74K levels, which is where, we have a lot of previous buying activity or distribution. So, this is going to be a crucial range. Can it go below that? It's quite likely that it goes below that, but you can see, right, when the prices are falling, like if I just move around a little bit, right here, right, you will see that this area is where like a lot of like very smart people got into the asset in this market, because once the price collapsed, right, it gave an opportunity. Actually, let me just find the all-time history index. It's much better. Yes. So you can see already like big volumes happened at this range. This is when after the FTX collapse, Bitcoin had bottomed out. And since then, right, it broke above its 30-week moving average, right? It broke above its 30-week moving average. It's been above that. And it has respected this long-term trend line as well. Now it has broken the trend line. It has also broken its 30-week moving average. So we are in a downtrend, but December onwards, QT is going to happen. You already see that large bankers, smart money, they're all buying hard assets. You've also seen that JP Morgan has announced that they are going to launch their own Bitcoin structured note. All of this points me to only one thing. Either there is some kind of a manipulation in the market which has caused this massive decline, because otherwise there is no reason for this to happen, right? There's no crazy buying, sell volume that I see here. No major threat to Bitcoin. There is one threat that a lot of people are talking about, and that is the quantum threat. Let me just find that for you. Yeah, this is the one where Google's CEO, he said quantum compute progress is entering the same acceleration as early AI. Now, the quantum threat is real, right? But it's going to be at least a few years before we see any major disruption to Bitcoin. Because the thing you need to understand is that the global digital financial market, everything that you use in the banking system is protected by the same algorithm that is foundational to Bitcoin's encryption as well. So if quantum does end up breaking that encryption, just think about it. Like, the first place of attack is going to be TradFi, because TradFi is still gazillions and gazillions of dollars bigger than Bitcoin. So I think this threat is overrated. I think that the arrival of liquidity, and more importantly velocity of money back into crypto as a result of TradFi adoption, will see Bitcoin reverse much faster and achieve a new all-time high. Now, I'm not asking you to buy or sell at this point in time. I just want you to think clearly about the indicators that we are seeing in the market today, right? Clearly, we are in this space where you have folks who are, on one side, openly going into traditional media and talking all kinds of batshit crazy things about Bitcoin, and on the other side, the same organizations are coming in and launching products to sell to TradFi and earn billions of dollars in fees. So that's where I'm going to stop it. Now I want to talk about this little conversation that this little speech by Christine Lagarde, right? Rewind this so you can also hear what she's saying.
This matter that you referred to, and whether reserves of central bank should or could include Bitcoins, I think there is a view around the table of the Governing Council, and most likely the General Council as well, that reserves have to be liquid, that reserves have to be secure, that they have to be safe, that they should not be plagued by the suspicion of money laundering or other criminal activities. And as a result, I'm confident that reserves will not enter, that Bitcoins will not enter the reserves of any of the central banks of the...
So I'm going to pause here, and I will rip apart her statement or her claim about Bitcoin one by one. So the first thing that Christine Lagarde says is that reserves have to be liquid. Now, I don't know about her, but Bitcoin is one of the most traded digital currencies in the world. It's so well traded that even even CBOT has, even CME has a futures on Bitcoin, right? So there's billions of dollars worth of trade that is happening on Bitcoin. So that's one. She says reserves have to be secure. Well, Madam Lagarde, and this is to you if you're watching this podcast, the security of Bitcoin is guaranteed by energy, and it's decentralized. Billions and billions of dollars of real hardware powered by energy is used to solve a mathematical puzzle that is the foundations of the Bitcoin digital ledger and the Bitcoin blockchain. So saying or claiming that it is not secure is just tells me that either you're plain lying, or that you haven't studied enough. Now, next she says they have to be safe, right? So today we have so many custodians. Like, I mean, just imagine, why would a company like BlackRock, which is the largest asset manager in the world, managing over $10 trillion in assets, would issue an ETF backing a currency if it wasn't safe? Clearly, there are custodian solutions. There are top of the line, technical solutions available today to secure that Bitcoin. So that's three. And finally, she says that it should not be plagued by money laundering or other criminal activities. Now, I want to bring your attention, and this was me not spending any time. I just did one Google search and I asked for money laundering in EU stats, and this was mind-boggling, guys. It just shows you the level of how these bankers think we the people are stupid. But let me just go through the research that came from Google, right? So Google says that in 2023, the estimated money laundering volume in the European Union was $917 billion, while the total in Europe, including UK and Norway, was around $750 billion, right? Germany, France, Italy are top countries by volume in the EU, and over 70% of the criminal networks active in the European Union use money laundering to fund their operations. The scale is enormous, with global estimates suggesting 2 to 5% of global GDP is laundered annually, and Europe represents a significant portion of this. So, I mean, just can you imagine the level of lying blatantly coming on to a platform just because you have power, and lying head on, and nobody counter questioning their claims? So this is the world that we live in. The reason I make this podcast is because I want to make you aware that why they hate Bitcoin, why they are not able to come to terms. Because, I mean, I don't want to talk about any conspiracy theories, but $917 billion of money laundering is happening today. Is it happening all through Bitcoin? Not even a fraction of it is happening through Bitcoin. I can guarantee you that. And in one of my next videos, I will bring you a report from Chainalysis, which actually measures illicit activity on chain, meaning transactions that are happening through a cryptocurrency on a blockchain. And you would be surprised to see that barely any are happening. So the reason I'm talking about all of this is because it pains me that the people who are responsible for guiding our economies forward, for protecting our wealth, are lying through their teeth about what Bitcoin really is. Bitcoin foundationally is an energy-backed asset, right? It is secured. It's secured by billions and billions of dollars that have been spent to generate for energy, in order to secure the blockchain. So that, combined with the actions that these guys are taking, whether it is large TradFi institutions, whether it is the run to the debasement trade in terms of gold and silver now seeing all-time highs, it is only a matter of time before Bitcoin goes berserk, guys. So my recommendation to you at this video: start DCing in. All of the dips that you see in Bitcoin are worth buying. I'm going to come again and probably make a special weekend show. This show is going to be about privacy, right? So we saw the quantum threat, and quantum threat is actually real. I'm going to dive into the quantum threat. I'll tell you what that quantum threat exactly means in the context of cryptocurrencies, and especially Bitcoin, and what are the solutions that are currently available in the market, which, with an active cryptocurrency backing them, which could be an interesting asset in your overall portfolio that can allow you to basically deal with the quantum threat. That's it, guys. That was the video. I hope you enjoyed it. If you did, smash that like button and don't forget to subscribe.